What is going on, investors? Hopefully, you guys are doing well out there. It is time for the FAANG Stock Recap Show because it is Friday, and every Friday here on the Investor Channel, we recap all the major news of the week and the technicals from the major FAANG stocks. And what a week it was. We saw lots of roller coaster swings on these stocks. We'll go over them today. Let's kick things off with Facebook. Start of the week at 208, slid all the way down below $190 per share, only to end the week up actually at $210 per share. Talk about that from a technical perspective here in a moment. Meta platform is to break up their team that was working on a VR and AR operating system. Instead, they're going to go with an open source version of Google. If you've been following the channel, this news or this rumor was floated several weeks ago, and it appears that that is the direction Meta is going. They speculated in this article it could be to keep a lid on cost. I don't think Facebook's worried about cost right now in terms of what they're doing, because when we looked at their other press release that they came out here, that the company detailed their next gen AI investments, and I went through this article and I take a look at all the stuff that they're doing, and it looked really, really cool. Some of the stuff that they're working on. Will it ever make any money? Will it be profitable for shareholders of Facebook? That remains to be seen. Moving on to Apple, started the week at 168, got all the way down to less than $155 per share, only to rally higher to $164 per share. Apple did outpace the PC market just marginally in 2020-21. In terms of their PC sales, they gained about 0.3%. They're still in fourth place behind HP, Dell, and Lenovo, but obviously they capture a large amount of the profits. Moving on to Amazon, start of the week a little bit higher, 3,080, ended up going down midweek to about $2,848 per share, only to end the week higher at 3,075. I hope you guys enjoyed the roller coaster ride these stocks are on. Apple and Amazon take the lead over ESPN in the NFL Sunday ticket bidding. We thought this was likely the case because Apple and Amazon are the only two companies with this type of money and the type of broad distribution that wants to have this. Now, obviously it fits in with Disney, but the rumor is they're well underneath what Apple and Amazon are offering. The rumor is that you're looking at $2 billion. That's two with a B, $2 billion per year, not for the whole contract, $2 billion a year to cover the NFL Sunday ticket. And yes, when you're at that price tag, only Apple and Amazon, and obviously Microsoft if they wanted to play in this, and maybe Google if they wanted it as well. Those are the only companies, quite frankly, that could do that from a financial perspective without blowing things up. Disney certainly could do it, and they certainly have the distribution to do it, and they certainly would recoup a fair amount of that money back in advertisements and other cross promotions. But when it comes dollar for dollar, it's going to be tough for them to compete with sports rights against that. And if that's the trend, you're going to want to see Disney pivot to their other business models. Moving on to NVIDIA, started the week higher, actually, just marginally higher, $243 per share. Can't be doing math here on a Friday. Ended lower about midweek, like a lot of these stocks. They just really dumped out, 217 all the way back up to 241. We'll talk about this from a technical perspective when we get to the chart. It's interesting with a couple of these stocks. NVIDIA is hit by a potential cyber attack, but the business continues uninterrupted, and this was according to NVIDIA and reports. They saw their emails down and some of their cloud services down as well. We'll see if that's related to any of the events that we're seeing overseas. Now, AMD, NVIDIA to benefit as GPU market is still in its early upgrade cycle. So a lot of this is a little bit like anecdotal and kind of boots on the ground kind of research, but we're seeing just the average selling prices of GPUs are through the roof, and through research, they're seeing that only a small percentage of gamers have really updated to the latest and greatest, likely due to because the previous generation is quite good, but also because you have such a supply shortage on these that it's driving up the price. People are waiting for the prices to come down a little bit before they really hit that upgrade cycle. So even as supply comes online, and even as we start to see maybe the average sell-in price start to go down, at least on the secondary market, that still should benefit AMD and NVIDIA and likely other chip makers as well, considering there's so much demand for the newer GPUs that are out there. Moving on to Google, started the week at 2,661, ended down to 2,533 about midweek, only to rally all the way up to $2,690 per share. Interesting spot that Google was in earlier this week. Digital publishers eyed their exit from Google's mobile web approach. This relates to Google's accelerated mobile pages. They've been pushing a lot of webmasters to go to these pages. Well, why is that? Because it appears that it's almost impossible to run any other kind of form of advertising on this, and it kind of pigeonholed you into just running simply Google ads or Google AdSense. And so publishers are starting to push back on that and starting to say, we get just as good a performance using our own HTML and our own code, and they're ditching Google's attempt at that. Moving on to Microsoft, started the week at 290, dipped down to about 275 just briefly, and rallied hard all the way up to $297 per share. Activision, which is looking to be acquired by Microsoft, is postponing a 2023 version of Call of Duty. Now, not to fear if you're in the market for the game this year, they're planning a fall release of the game in 2022, but it appears next year's game will be the first since 2005 not to have a yearly update to it. And we'll see. Maybe it's obviously it's probably due to the quality of the game or the production or whatever they're trying to do, but it'd be interesting to see if game makers like Activision under Microsoft's control start to pivot more to like a Take-Two Interactive role, where they come out with one game like a Call of Duty, like a Grand Theft Auto, and they milk it for like 3 or 4 or 5 years, or they continue this kind of maybe annual updates, or maybe they switch to kind of a bi-yearly updating these things. It'll be interesting to see how the video game makers proceed. Moving on to Tesla, was much higher at 863, dipped all the way down well into correction zone, down to about $732 per share, only to end the week in after hours trading closer to $811 per share. Tesla's Elon Musk and his bro are being probed by the SEC for potential insider trading violations. This has to do with several months ago when Elon Musk put that Twitter poll up, should he sell his shares, which he was likely going to sell anyways. Well, his brother exited out of a large position of his shares, and that is getting a probe by the SEC. More than likely, if they are guilty, they'll get the equivalent to a slap on the wrist. Tesla boost parts production in capacity at Giga Shanghai. This factory is just continuing to scale up, and Elon Musk talked about it a little bit on the last conference call. I think that was back in January. Talked about how they constantly are trying to produce more cars out of these factories. And certainly in China, the way the regulatory environment is a little bit different there, they can expand capacity far quicker at a factory like that. And we should see strong results there. Moving on to the technical segment of the show, kick things off with Facebook. Has Facebook shares bottomed? I'm sure many of you are probably asking that question. So Facebook came all the way down here, dipped into our box here that was kind of boxed out between about 161 all the way up to about $195, $190 per share, kind of dipped its toe in there. Now, we're still in a downtrend. I mean, it's easy to see that the stock has formed a little bit, at least temporarily, of a bottom. It has rallied down here, but here's my points with Facebook. We've got overhead resistance up here back at 220. If you did not get stopped out of the stock back up there at 220, that could be an area where if you want to get out of this name, you could get out of this name. You break above 220, that can be a very bullish sign. In fact, it would signal, at least very temporarily, that we could have broken through the bottom. And I'm not saying this is going to happen next week, although the way the market is moving right now, it could happen like on Monday. But what I would more expect is like a traditional uptrend. When a stock forms a bottom and then reverses, it goes up, it comes back down, it goes up, it comes back down. So I would expect Facebook, if we have bottomed at this area, we would come up here to 220, get rejected. As long as you don't come back down and hit this red box again, you make a higher low, well, all of a sudden this stock has likely formed a little bit of a bottom temporarily. The things we got to remember though with Facebook, there's going to be heavy resistance at 220, even heavier resistance up here at 246. Okay, you got a ton of dip buying on this, and they are still well underneath where they bought those shares. So a lot of sellers will likely materialize as you move move to these areas. So I don't look, you can jump into this stock as quickly or as non-quickly as you want to. If you were like me and you got stopped out of these shares, I'm not really in any rush. We do have earnings coming up. It looks like in April 27th. That is going to be a key day. It's still a long ways away, but it can be a very key day. The other thing I'll just take us broadly out with Facebook is there is still, you could make the argument, this big green line that I've drawn in here, you can make an argument that this stock is still in an uptrend and we're likely just retracing back to it. The longer this takes, this 190, 200 area can be an area where you can accumulate shares. If I were to dip by Facebook, it wouldn't be aggressive. So if I wanted 10 shares of this, 1-2 shares at a time, to see how it reacts. Again, I don't necessarily see this one snapping all the way back up into the 240s. It certainly could happen, but I think you'll meet some resistance along the way there. Moving on to Apple, this one still looks pretty good from a technical perspective. It's still in, there's a lot of ways you can draw this uptrend in with Apple. It's still in an intermediate term and then even a much longer term uptrend up here. It is in a shorter term downtrend though with this one. You are seeing a lower series of highs. You had kind of a double top here. You had another lower sets of highs here at about 175, another grouping that was kind of right there at 175. And now we've kind of completed another set of lower highs down here at 164. I would expect resistance on the way back up. Again, the fact that these stocks bounce, absolutely not at all surprising. This one found footing south of about 150. In fact, it got all the way down here to 152. Certainly from a dip buying perspective, when you see a stock like this dip that much, you would have had to pick it up intraday. I don't necessarily think everybody's paying attention to these stocks as much as other people. I would expect resistance as we came back up here to 168. That's $4 higher. I would expect resistance up here at 176. If these stocks have bottomed, I don't think they're just going to snap back to all-time highs. In fact, if they do, I'd probably be a seller of that type of rally because we would see resistance again up here at 181. We need an orderly uptrend with these stocks for it to appear that this is a bottom. An orderly uptrend is several days of kind of up and down action, with obviously the down action being at a minimal. Moving on to Amazon, just sitting down here at the bottom end of support, okay? Really for the last, really since June of last year. So we're coming up on 2 years, not last year, we're talking about June of 2020. We're almost on 2 years of sideways consolidation with Amazon. Now we've spread it out a little bit. The consolidation was up here closer to $2,900. Now it's probably a little further down here to about $2,700, and you're probably consolidating at this lower end of this range. So you're really consolidating between $2,700 and about $3,000 on this one. It just has not been able to really decisively break through that $3,000 level. And until then, I think you have to assume that's where Amazon is going to be. Moving on to NVIDIA, really just confirmed we're still in kind of an intermediate downtrend with this one. Got a higher sets of highs, lower sets of highs, all along here, lower sets of lows all along here. It wouldn't surprise me if NVIDIA works its way up to this trend line next week, but then gets rejected. We do have an area of support here down here. It's kind of a wide range. You're all the way down here to about, I would say even all the way down to $200 per share, up to about $230. You could, if you felt like it, accumulate shares of NVIDIA in that box. It wouldn't be the worst decision I think people have made, but to be on the safer route, I personally would probably wait for a breakout above this upper trend line. That could signal that we've actually finally made a bottom. Once you have that realization, some sellers should step in. This stock should take a dip. I think you could buy that dip. Will you get it at the absolute rock bottom price? Not necessarily, but you do run the risk if this downtrend continues, you pull all the way back into this sideways consolidation between 115 up to about 150 on this stock. That would be a buy even without the sign of reversal, in my opinion. Moving on to Google, this is a good example of how you also have sideways consolidation. And if you do want to dip buy without the sign of a reversal, well, those levels are very much intact. With Google, it's down here at about $2,500 per share. The stock has tagged that level twice over the last month or two, and it has rebounded pretty significantly. In fact, all the way back up to $3,000 initially. We touched 25 earlier earlier this week, and now we're up here closer to about 27. There should be some area of resistance up here at 27. You break through that, and I think you have the momentum easily to carry up to maybe 2,900, maybe 3,000 with Google. But all things being considered, very similar to Amazon, although the sideways consolidation not as stretched out with Google, much shorter period of time. But it appears that the given moment with Google, we're just consolidating between 2,500 and 3,000 on that stock. Moving on to Microsoft, a very similar chart to NVIDIA. The fact that you made this topping pattern here, and we're still just making lower sets of highs down here. And if the stock does not get back up above 308, so if we don't make a move back up here to 308 and instead Microsoft turns down next week, well, you just confirmed essentially another lower sets of highs on this one. It looks like if you want to dip by this one, you just want to step in there. You don't care about kind of maybe a shorter term technical trend. Down here in the 270s, 280s can be an area because it is acting as a level of support. But again, if this downtrend just continues that we're in the shorter term, and we have to assume despite the rallies over the last 2 days in the stock market, these trends, at least on the stocks that we're looking at right now, these trends are not broken yet. Okay, the stock would still have to rally another $10 or $15 per share and really close up there to really signal that maybe this was kind of a bottoming formation. Otherwise, we assume that maybe prices are going to go lower and we're going to be able to get a better opportunity at these stocks. Now, Tesla is really illustrating this. Okay, this stock is making a series of lower highs. It tried to defend this area at this $900 level. It broke all the way down to the top end of a range that we've had marked out here for a while, all the way down to about $725 per share, at least in the shorter term. If you just want to step in there and dip by, I see the comments, I read the comments. A lot of you don't want to wait. You don't want to wait for a sign of a reversal. You're trained in this market, and look, you're trained on stocks like Tesla just to continue to buy the dip. And look, when I look at a stock like chart like this, or really any stock chart of any of the companies that we're looking at, I don't blame you for just coming in here, and anytime there's a dip, you're buying. My only advice with that is think about the total number of shares that you want, and maybe not do the, like if you want 10 shares of Tesla, which would be like $8,000. Okay, if you want 10 shares, maybe just 1 or 2 shares at a time when a stock is in this downtrend. Okay, when it's in an uptrend, I can understand being a little bit more aggressive. The other area where I could see being more aggressive on a stock like this is down here south of 700. I certainly would be aggressive down here closer to about we'll call it about $650 per share. I'd probably be a little bit more aggressive down in those areas because yes, you will not shown a sign of reversal, but you're hitting areas of support, which when we looked at Facebook, we saw a pretty firm bounce when we got off of support. We've seen it with even like a stock like Amazon. When it hits its consolidation range, it bounces. We saw it with Google as well. We saw it with all of these stocks this week. When they hit an area of support, they bounced. Now next week, we will see if the bounce was just simply a bounce or if this will be actually followed through next week with upward price action. If you get upper price action, just like we've seen over the last 2 days, I tell you what, I think you can at least temporarily determine that this was a bottom. But when these stocks get back up to all-time highs, how will they react again up there? Can you get a pullback? I don't think we need to rush into this. These stocks breaking through to all-time highs, I think is a somewhat challenge. Earnings are several months off. There's a lot in the news cycle that will also likely keep the economy and stocks down just a little bit. We'll see if those theories hold true. We still remain firmly invested in this market. We might have a little bit more cash on the sidelines ready to pounce, but those are the strategies we're taking into the next couple of weeks. Hopefully you guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.